MD and Head of Research, and Navin Sahadeo, Vice President, all now join us in our studios. Gentlemen, good morning and thanks for coming all the way to our studios. Gautam, how are things looking right now? Because November sales didn't really look that problematic, but do you think going forward there would be some pain in the system?
Yeah, I think we'll have to focus on the December numbers. I think the December numbers will invariably end up surprising people. Not necessarily us, because we just come back from the 10-day road trip and we've seen the pain that's out there within the country. But the reality is that most of the places we went to, people have not even seen the new 500 rupee note, let alone the 2000 rupee note. So, and the people who've got their hands on the 2000 rupee note, unfortunately, are saying we can't use them because there isn't enough change on the other side. So I think this is going to have a significant negative impact immediately on sales. That's one. Two, if you look at the auto sector in the two-wheeler space, we've seen a massive contraction in sales. And again, that's also because most two-wheelers, for the most part, are below the 2 lakh rupee PAN card radar. And 50 to 60% of their sales are indeed in cash as a result. So I think that's really where we're seeing a lot of pain. We've met most of the big manufacturers, the dealers of most of the big manufacturers, and unfortunately that's the case. So I think that pain will continue for some more time.
Okay, actually I wanted to ask you about the sowing itself, Varun, if I can, if you all got any details. We were told that the net sown area is not very different from last year same time, but because of lack of money, people are not able to put in inputs. Did you get a sense that this agricultural season as well might give less in terms of income?
Yeah. So, the feedback was slightly different from state to state. So, Maharashtra and MP, we saw that sowing is progressing well as per schedule. UP typically, goes for a Rabi sowing a bit late. So, out there it is delayed a bit further due to this demonetization. Okay. But apart from sowing, so I think overall sowing number may not come down dramatically, but if you look at the internals of that, a lot of people are using the older seeds, like the last year's crop for for the new crop. Plus they are using government seeds, in which case the yields could be a bit lower. They are not going to use too much of fertilizers and pesticides. So the essentials, again out there, the essentials, the seeds are still seeing some offtake, but pesticides and anything which enhances the yield, we are seeing a sharp drop out there. So, so I think it will be difficult for yields to be maintained on the Rabi crop, and therefore even though the area under acreage might look good, but you might have a lower crop output.
So general purchasing power could take a hit.
Yeah, we believe because Kharif, again the realizations have got impacted, especially for the perishables. So cereals, we have still seen good realization for farmers, but for perishable, whatever yields were good this time around in Kharif got negated to some extent by the lower realizations. And in the Rabi case, we believe the yields itself might be lower. So I think for both Kharif and Rabi, compared to what the expectation was in terms of the realization for a farmer, the farm income will take a hit, and therefore the rural demand might take a bit longer than expected. That's the view we are getting.
Okay, it's very interesting to hear these takeaways, because sitting here in the studio, it becomes so hard for us to judge what's really happening with the rural space. But Gautam, just to brighten things up, are there any states which have, or any pockets which are moving seamlessly to sort of cashless transfers and are being able to cope up with demonetization quickly?
We haven't honestly seen too much evidence of that as yet, unfortunately. But I think Indians can adapt really fast when the gun's put to their head. And frankly, this is what Mr. Modi's done. So we did not see much use of Paytm. Some people said, what is Paytm? I think this is a new concept to them. But I think UPI, which for some reason is not being as heavily advertised as Paytm is by the RBI and or by the government, I think they should promote that, because that is SMS based and you don't really need a smartphone.
The ads have started coming.
Exactly. So now finally that's starting to happen. But I think people will have to adapt and change to the new environment.
Okay. Gautam, the other issue is on housing and cement, because that's the other big worry, that what's happened in that space, especially in the hinterland. What's the feedback?
So let me answer the first part of that question, and Navin covers cement, so he'll talk about the cement bit. But on the housing bit, again, in all three states that we went to, people basically, everyone said that land should correct 30 to 40%, and built up real estate should correct anywhere from I guess, 15 to 20% or 25%, depending on who you speak to. But the problem is that's not happened yet. No transactions taken place as yet. Okay, so it's very early days, and until we don't see a transaction happening, and of course, logically they should correct because the cash element's been sucked out, at least for the time being. But specifically on cement, Navin, I defer to you.
Yeah, so in cement, what we've seen certainly first is, of course, the knee-jerk reaction. So in November, so to say, most of the large stockists which we met, they said that their sales on a year-on-year basis were down almost about 20 to 30%. But when we interacted with the retailers, the small-time cement dealers, for them, the sales impact was a much higher 50 to 60%. Now, for December, so to say, the general expectation, I think, on the street is that the numbers in absolute volume terms could be better as compared to November. But to our surprise, the feedback is that the December numbers could well be at par to November, or in fact could be a tad lower than that, which on a year-on-year basis.
Can you give us some regional color on this?
Sure. So if I were to talk about Uttar Pradesh first, now the sand related issue specific to this state has been impacting demand right from July. October as a month, they saw a severe brunt of it, wherein as compared to September, if I were to just say, the numbers were down almost 20% in October already. And because of this demonetization, there is a further dip of almost about 15 to 20% on that low number in the month of November, so to say. Now, also, as you see, South was not part of our road trip, but of course, we did, prior to this, we did make a visit there. Now, South, again, this is very region specific. That same period last year, November, in Tamil Nadu in particular, there was a huge impact of heavy floods there. So on that low base, November could actually turn out a very big surprise of almost 20 to 30% growth for companies. But now, as we speak, let's say as recent as yesterday, dealers are definitely worried in terms of their offtake, which is seen a slowdown now. But very quickly, I want to highlight to your point about adaptability to that new mode of transaction. The general feedback is that in South, I think the resilience to this new payment will be far bigger. I mean, a very quick observation there being that you see, even today you see queues outside banks and ATMs, even in Mumbai, leave aside the other place like North or Central region or West. But in Chennai, I was surprised to see hardly any such queue, or even if there is a queue, it was a fairly small, like just 2-3 people there, particularly in Chennai.
That's interesting. Varun, what about the truckers space? Because, a lot of people tell us that long haul operators have faced quite a bit of an issue. And they have a lot of their payments that happen in cash, right? When they move from one state to another. How much pain do you still see there? And when do you see any recovery in the commercial vehicle space?
So I think commercial vehicles, the consistent feedback which we were getting was, it was anyway weak before this demonetization issue. The fleet operators' profitability and the freight was anyway on the weak side. So the space has been under pressure for last almost 12 to 18 months across most of the regions. And this is an additional hit. So we saw that the movement of goods was still happening. So it's not that things have come to a grinding halt in terms of the transportation, but anyway the volume offtake for the freight operators was weak, and it has weakened further after this demonetization. And the expectations of recovery in that space were quite weak, I would say, compared to a lot of the other segments when we looked at. I think partly because the underlying fundamentals were anyway weak, and in terms of the CV financiers also, we met the used truck demand has really fallen, and therefore the rates have fallen out there. And there is no incentive for a freight operator to go and buy a new truck, either a new one or a used one. So I think CV transportation industry will remain under pressure in our view for some more time at least, and that will have a ripple on effect on the CV industry as well.
Can I just add something to that? I think the other thing which is interesting is that one of the dealers that we met, he said that the body of the truck, actually, it's completely unorganized. It's mom and pop shops who actually make the body of the truck. So when you buy a truck, you don't get the whole body with it. You only get the front cabin and the rest of the truck. So that entire industry is cash based. And that's come to a grinding halt as well, as a result.
Well, we want to ask Navin also about auto ancillaries. In fact, we want to ask you several other sectors as well. We take a break, but we have a lot more themes to discuss from Religare's Great Indian Road Trip. at this point in time, the Bank Nifty has given up all its gains. It always looked like the weakest link. The other indices have held on to, I mean, the Nifty has held on to 8150. The mid-caps are still about 0.7% higher. Advanced declines are still about 3:1 in favor of advancing stocks. But Bank Nifty is quite clearly the lame duck at this point in time. Well, not much to look forward from the monetary policy, I would assume. But speaking of banks, Gautam, in your rural trip, did you notice that credit quite efficiently substituted cash? I mean, there was this very interesting article by J.R. Verma of IIM saying that, why are we making so much of cash? So much can happen on credit. Did it?
Yeah, so the question is that did we see more evidence of
that people
credit?
saying, okay, you won't pay me now, but you can pay me a month down the line, 2 months down the line. Was that smoothing out issues?
Yeah, I think that has basically become sort of a go-between until the people adapt to the new environment. My fruit wala who sits very close to where I live said the same thing. I said I have a credit card and I don't have any cash. I did that on purpose just to test if he was going to accept the credit card. And he said I don't have a machine yet. I said, well, when are you going to get it? He says I'm thinking about it. I said you better hurry up and get it. He said, "Saab, kyun tension le rahe ho? Baad mein paisa do." So he was willing to give me credit in Mumbai.
No, but in cement, in big industries like that,
Right.
Was there the ability to get by with business? Because ultimately you will pay. You are not insolvent. You
Right.
have a liquidity issue.
That's
I
right.
think in consumers, what we saw is, a lot of the companies have started giving, better terms to distributors just to ease off the, the credit crunch. So they are giving, a longer credit to the distributors, who in turn are passing it on to retailers. What
Navin
we
is
also
shaking his
observed
head
was,
vigorously. I mean, is it that you saw more of it in auto ancillaries, suppliers' credit?
In the sense, see, companies are doing, obviously, my point is, companies are doing obviously whatever they can to push as much as possible from their side, or offer, let me put it this way, that to offer whatever best support they can from their side. So be it in terms of increasing the number of their debtor days is possible. Ultimately, you have to understand that there is a credit limit every dealer enjoys, and that dealer in turn will have a credit limit for every consumer. If the genuine consumer itself is taking a backseat, how much more you would want to extend credit?
Sorry, Varun, you were saying.
so in the interiors, what we observed is a lot of these, say the contract laborers who are not getting cash flow on a daily basis. They are going and getting credit from the local kirana, from where they, used to buying. But again, it's very much trust based. So people whom you have interacted with over the years, you are able to get credit. But say agri input dealer, when he is giving credit to a farmer, or when he is selling an input to a farmer, because that farmer goes only twice a year to him, that relationship is not there, then you won't get the credit. So it's in rural, I would say there is a lot of this credit thing which is working, but all of it works only for a short period of time. If liquidity eases out by say December and January, then we are fine. But there is a limit to which you will you can get credit, and I think that would probably remain so for another month or so. I think things can move around, but post that we need the real liquidity to come into the rural markets.
Just a couple of stocks that we should point out. Crompton Greaves is again resuming its downtrend. Yesterday was down 10%, and Sun TV looks like at least that near-term rally is getting over. So that stock is also in the red. So Varun, based on your road trip, are you pretty sanguine that you'll have to cut overall earnings estimate and market valuations?
Yeah, so when we are doing bottom-up numbers, so FY17 second half, obviously there will be a cut for most of the stocks, and the cut could be quite sharp, because we believe the recovery may not happen in Q4 also, and in certain cases, even on the staple side, the things might take almost first half of FY18 to get normalized. So in fact, FY17 gets cut for sure, driven by second half, but even FY18, because the percentage growth you may not be good enough for you to compensate the lost sales of FY17, and it might take time for some of the discretionary categories within staples to come back to the normalcy. So I think FY17 and 18 both would be at risk for a lot of sectors. Obviously, the extent of cut for FY18 would depend on how fast the liquidity comes back into the market. So I think that's the big assumption that one has to see how it progresses by come January, February. If liquidity really normalizes in the rural hinterlands, then probably FY18 may not get impacted. But my view is driven by FY17, FY18 earnings will also get cut for most of the sectors.
Okay. We didn't check with you guys about how the financial framework is in the rural areas with respect to banks and how the cash is getting disbursed. I mean, a lot of ATMs are dry even in the urban markets like Mumbai, Calcutta, etc. But what did you guys notice in the rural areas?
I think on farmers in particular, we met a bunch of agri dealers as well, and also farmers later on in UP and MP. What we found there is that the cooperative banks basically have stopped giving money. So that's number one.
They were not allowed to
They were
exchange.
not allowed to, exactly. There is a liquidity problem with farmers. I mean, the farmers have had actually a bit of a double whammy. So they've seen the produce price actually come down significantly, and the cost of farm labor has gone up anywhere from 50 to 80% year on year.
And that's cash based, right?
It's completely cash based. So that's a real it's a real a problem that the farmers are facing. So I think until liquidity doesn't come back, a lot of that is consumption is going to get impacted significantly.
So you would be more worried about the rural facing industries. You're cutting the earnings
Yes.
forecast more for them?
Absolutely, yeah. Well, I think I defer that to Varun, but I think that is clearly emerging, right? It's more rural
so
versus
what
urban.
we are seeing is the low ticket urban seems to be least impacted because the switching to digital or credit cards or debit cards is much easier out there. Anything big ticket in urban is also getting hit, but low ticket urban is probably the safest place as of now. Rural, everything is impacted, be it low ticket, be it big ticket as of now. Low ticket is still working on credit, as I said, which can continue for next 1 to 2 months. But as of now, it looks like rural might get impacted a bit more than urban.
So anything
Navin, your sectors, how would you look at earnings?
Yeah, so
you have both auto ancillaries and cement.
Correct. So to start with cement, earnings cut is certainly there because from November till March, I would expect a drop in industry volume numbers on a YOY basis, though marginal.
So it's not slowdown, it's contraction.
There has to be, in the sense that November, as we said, the general feedback is a 20-30% drop at the wholesalers and retailers. So eventually the system has to slow. And like I said, December seems to be like a further slower a month. One point again I think missed in the initial comments is that until now your 500 rupee notes were accepted at diesel stations for the trucks to ply. With that also being a halt, there is a further hit, and not just in cement, then unorganized building materials like your sand and your brick movement. So that trade was continuing because you could still utilize that money to get diesel at the petrol pump. So that impact I think will come in December. The feedback in general, I think we have an opinion is that till March you will certainly see a negative, if on a marginal single digit number, but will still be negative. And for FY18 then you would expect something like a 3 to 4% growth. Second half, of course, because of this low base will be much better. Earnings cut, definitely. I mean, needless to say that.
Yeah.
But to me, in cement, I would also see a risk to the valuation multiple. In the sense that all this while, the cement stocks entirely were on a dream run, given the fact that there were multiple positives. And now, as you see, turn by turn, each of that is getting unwinding. So, to me, it's a multiple risk also, rather than the earnings risk. In auto particular, I would see an earnings cut.
Okay, so that's a lot of cautious comments. But just to wrap it up, anything positive apart from the dhaba food that you guys enjoyed through the trip?
I think 80 to 90% of the people that we met, more towards 90 rather than 80, are extremely happy with the move. And the reasons are as follows. In spite of the fact that they have an immediate cash crunch, I think first and foremost, they are very happy that somebody, i.e. Prime Minister Modi, has had the guts to actually go after the corrupt. At least this is the perception that this is going to help, at least the first step in rooting out corruption. And I think people in general are saying that, yes, if we have to bear pain for the next 45 to 50 days, that's the perception that it'll not be more than that. But my concern really is if the disbursement of the new currency doesn't accelerate, then this could quickly turn into anger, which we've seen some pockets, like in Lucknow, we saw some rioting outside the syndicate bank. But I hope it doesn't become nationwide. That's the only concern. Otherwise, everybody loves the move.
Okay. Yeah, I wish we could channelize that mood and get something constructive going. Thank you very much, Gautam, Varun and Navin for joining us and giving us a first-hand experience of how the cash crunch is hitting rural India.
Thank you.
Well, we have to take a break on that note, but we will turn back to technicals because